Hey everybody, welcome back to the channel. So every time I do a review on a prop firm, I always get asked the question, what are the spreads like? What are the commissions like? What are the transaction times like with the brokers? Now, it's very hard to test real market conditions with every single broker and every single prop firm, but I do have a lot of accounts with them now, a lot of demo accounts or real accounts. So I thought I'd do a very quick summary of the ones I know about, and also people have asked the questions of in the past. I think why people want to know this question is a lot of people have some very fast trading strategies, getting in and out very quickly. And if when you're going into a trade, you're instantly in a negative because of the spreads, and especially if the spreads are quite wide, you might only want to be taking 1, 2, 3, 4 pips from a move. And if your spread is already 2 pips, it's a significant amount of movement to get into a profit. So before I get going, very quick overview of what spreads are. Essentially, there's a difference between the buy and the sell price which the brokers offer. Now, because they're almost making the market, they need to have quite tight spreads to attract people in, but also they need to have them wide enough to make a profit themselves. So you look at the major pairs, Euro, Cable, Yen, Swissy, all those ones, they generally very tight spreads to attract people in. There's massive volume there's not much slippage, and so they can go in very tight spreads and still make a profit purely based on the volume of trades. You look at some of the more exotic pairs, especially some of the Scandinavian currencies who do move a massive amount. They could move 500 to 1,000 points in a day. I've seen that on several occasions, and so the spread is obviously quite wide. You can have a 10 to 100 point spread on some of these particular pairs, but because the movement is so high, that's taken into account, and therefore you're going to get the money back eventually. Over the years, the brokers have been trying to attract customers in and always saying we have the tightest spreads. You look at some of the real big players, that's where their main selling point. If you look at, let's say, the Euro or the DAX, that's where they're trying to attract a lot of people into trade, because they are very high volume markets, and the tighter the spreads or no commissions, then you're going to attract more people in. And as we know, the majority of traders, 95% over the long term, will lose money. So the brokers not only make money from the spreads and the commissions, they also make money because people are losing in the markets. Now, prop firms try to simulate the markets as best they can for true market conditions. So because of that, they still need to have access to broker platforms and offer that spread and that commission. So in an ideal world, it'd be nice to have nothing, but the reality is they've got to show market conditions and pass almost those costs onto the trader to get into that sort of process. So let's have a quick look at the comparison between all of the prop firms I've got and what the spreads are like. So if we look at the spreads here, we can see the Euro is very tight, anything from 0.2 up to 0.6 pips. We can see on the US 30, anything from sort of 1.4, 1.5 up to 3.6, which is probably the largest spread I've seen on the US 30 or Dow Jones. But overall, the spreads are very consistent and very tight. There's nothing there dramatic that I really worry about. We're not seeing anything that's sort of 2-3 pips on some of the major Forex pairs. And again, looking at gold, they're very much in that zone of 0.15 to 0.2 points on a spread. Now, if you look at the prop trading, they're quite clear on their website. They say their spreads are 0.5 or higher, depending on the currency pairs, but they also don't charge any commission. Some of the other firms that might have a 0.2, 0.3 spread on, let's say, the Euro, they might charge one lot as a commission. So therefore, although you're gaining on one, you're losing with the other. And the only way of really testing it and finding it out is to do some trials and get a demo with these prop firms and really try it for yourself. Does your strategy work using the commissions and the fees? Now, for me, I'm not too worried about commissions and spreads, because a lot of my trades, I'm not doing very quick scalps. I'm not taking 1 or 5 pip moves. I'm looking for anything from 50 to 100 pips. Now, because of that, when you take into account, let's say, one lot of commission or 0.5 on a spread, that's quite insignificant in the actual money you're able to make on the trade. Now, yes, it does all add up, and these is what we call the cost of trading. Now, as traders, we can't avoid that. We have to accept it and move on and just sort of deal with what we can control, and that's finding the winning trades and being successful and profitable. Hope that's been useful to you. Leave a comment down below if you want me to look at anything else on spreads and commissions, and I'll see you again soon. Cheers.